Okay, so for Forex in 5 this week, in developed markets, the US inflation prints were very much the talk of the town. So we saw inflation prints coming around relatively unchanged levels, maybe slightly lower, but the big change was the previous print, which was revised sort of 40 basis points lower. So the fears around, inflation's actually still quite high, it's going to stagnate there for a while, but there's going to be a less requirement for cuts. That's sort of starting to reverse a little bit. Inflation expectations have come down as well into the end of the year. Now, this isn't going to trigger like an immediate three cuts this year. However, the dovish narrative has now started coming back a little bit more, having the hawks taken all of the attention for the last few months. We probably won't see a rate cut in the US until later this year. I think June's fairly off the table by all consensus, but there's no doubt that the narrative from the Fed might start leaning in that sort of dovish nature. In the UK, however, inflation prints came in quite a bit lower than expectations, so whilst again similar to the US, June rate cuts are slightly off the table. We're likely to see a loosening cycle again much sooner than we would from the Fed. However, it seems like there's been a lot of dollar strength over the last couple of months, which is starting to be unwound, particularly against the euro. Euro's taken a bit of a shot in the arm back up to sort of 108 levels, having dropped to 106 handle. Again, they're a bit further ahead still on the loosening cycle than the US. However, it's good to see that there's a bit more strength in the euro and GBP alike. In emerging markets, Nigeria have literally just had their MPC meeting where they hiked rates another 150 basis points. We were sort of looking at around 200 basis points expectation. That seems to be the relative consensus in the market. So 150 basis points arguably is a bit underwhelming. The immediate reaction in the market has been quite muted. We're still seeing Naira in the parallel market in the mid 1400s. There's been quite a bit of depreciation over the last month or so. Now, we have seen rates higher, we have seen 1600 in recent times, so we're by no means at a ceiling. However, our sort of consensus is that perhaps we'll start to see a bit more strength in Naira going forward. However, there needs to be more done from a policy tightening point of view. Rate hikes are going to run out of steam at some point. It's a bit of a law of diminishing returns. We might start seeing the CBN employing alternative measures. We've seen them do their open market operations in the past, narrowing the rate corridor, etc. But we might start to see other tactics used by the CBN, perhaps some measures that aren't immediately clear of the immediate impact. But that remains to be seen. Cardoso seems to be fairly composed at the moment. So there doesn't seem to be any panic in the ranks, but when FX reserves start to really drop, potentially we might start seeing some more knee-jerk reactions from Nigeria. Over in Kenya and Tanzania for that matter, our focus is still on the floods that are impacting crops and livestock in those areas. Now this should trigger a bit of a jump in inflation in the long run. However, the most recent forecasts are quite positive. In Kenya in particular, we saw a drop in inflation, which is pretty positive, particularly in reaction to the appreciation in the Kenyan shilling. Kenyan shilling seems to be floating from a 130 to 150 range. Again, this is being controlled quite a lot by the banks in terms of what dollars they have available, what rates they're permitted to sell at by the CBK. But we see no reason why this range of 130 to 135 won't persist for the time being. In Tanzania, again, inflationary impacts haven't materialized just yet in the official inflation prints. However, with the likelihood of inflation picking up a little bit more on the basis of obviously crops and livestock being a bit lower, we might start seeing a bit more depreciation. Rates have sort of picked up again to the high 2800s, having touched below 2800 earlier this year. So we'll see if this continues, but again, it's quite dictated by the banks in terms of what dollars that are available, but liquidity is paramount as always. Finally, in ZAF and ZOF, similar to what's going on in Kenya and Tanzania, cocoa continues to be the big focus. It seems that the harvest this year will be a bit lower, might see some depreciating factors at play. However, at the moment, ZOF, Central African franc, seems to be trending still near the peg, sort of around 2% premium. ZAF is clearly a little bit higher, about 5 to 7%, but we might start seeing some pressure on the currency, having seen a bit of appreciation over the last couple of months.